Fintech companies were supposed to be the future of banking. Fast, digital, lean, powered by technology instead of traditional branch offices. So when headlines started reporting layoffs across fintech companies, many people were confused. If fintech is built on technology and artificial intelligence is accelerating innovation, then why are fintech companies cutting jobs? Shouldn't technology companies be hiring more people instead of fewer? That question is exactly where the real story begins. Because what we're witnessing isn't a fintech collapse, it's a fintech transformation. And artificial intelligence is quietly changing how financial companies operate from the inside out. I'm Imani, your AI career coach. I help you rise above the noise, stand out above the rest, and thrive in the AI era. In this AI job report series, we don't just react to layoffs, we decode what they mean. Because informed professionals move differently. They don't just follow headlines, they analyze the strategy behind them. And right now, fintech layoffs are revealing something much bigger than a few workforce reductions. They're revealing how artificial intelligence is restructuring the financial industry. Let's start with something most people don't realize. Fintech companies were already designed to operate with fewer employees than traditional banks. Digital banks don't need hundreds of branch locations. They don't need large in-person service teams. They don't need physical infrastructure across every city. Their advantage has always been efficiency. But artificial intelligence is now pushing that efficiency even further. And when efficiency increases, workforce structures change. Across fintech companies, AI is absorbing tasks that once required entire operational teams. Customer service chat systems are becoming automated. Fraud detection is being handled by machine learning algorithms. Risk assessments are increasingly generated by predictive models. Loan approvals can now be evaluated through automated financial analysis systems. Even compliance monitoring is shifting toward AI-assisted tools. What used to require dozens of analysts reviewing transactions can now be supported by systems scanning millions of data points instantly. And when that kind of productivity shift happens, companies begin asking the same question we discussed in our previous AI job report. How many people are actually required to produce the same results? This question is not unique to fintech. But fintech companies tend to adopt automation faster than traditional institutions because their entire business model is built around technology-driven efficiency. Now, here's the part that can feel uncomfortable for professionals working inside these organizations. Artificial intelligence doesn't usually eliminate entire jobs immediately. What it eliminates first are tasks, small processes, repetitive workflows, administrative steps that exist inside larger roles. For example, think about the amount of work involved in reviewing financial applications. Historically, employees had to gather documentation, review income data, verify identity records, evaluate credit patterns, cross-check fraud signals, and document decisions manually. AI systems can now automate large portions of that workflow. Not perfectly, but efficiently enough that companies begin rethinking how many employees are needed to oversee the process. That's where layoffs often appear. Not because the company is failing, but because the company is becoming more productive per employee. And productivity is one of the most powerful forces in economics. When productivity increases dramatically, the structure of labor changes. Sometimes roles disappear, sometimes roles evolve, and sometimes entirely new categories of jobs emerge. This cycle has happened before, during the Industrial Revolution, during the Computer Revolution. Each technological wave reorganized how work was performed. Artificial intelligence is now reorganizing cognitive work. Work that relies on processing information, identifying patterns, and making predictions. The exact types of tasks that dominate financial services. Now, Let's look at why fintech layoffs sometimes happen even while company valuations or stock prices rise. Public markets reward efficiency. Investors pay attention to metrics like revenue per employee, operating margins, cost structures, scalability. If a fintech company can maintain or increase revenue while operating with fewer employees, that often signals stronger long-term profitability. And when investors see improving margins, stock prices can rise even during layoffs. That may feel counterintuitive from an employee perspective, but from a market perspective, it reflects confidence in a company's ability to scale efficiently. Now let's talk about something important for professionals watching these shifts unfold. Artificial intelligence is not removing the need for human intelligence in finance, but it is shifting where human intelligence creates the most value. When machines handle repetitive analysis, humans move towards strategic interpretation. Let's look at several categories of roles that are becoming increasingly valuable. First, AI operations roles. These professionals manage AI systems inside organizations. They monitor outputs. They evaluate system performance. Ensure automation tools are producing reliable and accurate results. Second, AI governance and compliance. As financial institutions rely more heavily on algorithms, regulatory oversight becomes critical. Governments and regulators are already discussing frameworks to monitor algorithmic decision-making in financial services. That means companies will need professionals capable of auditing AI systems, evaluating bias risks, and ensuring automated decisions comply with financial regulations. Third, AI workflow designers. These professionals understand both business operations and technology. They redesign processes so humans and AI systems work together effectively. Instead of simply replacing workers, they build hybrid workflows where automation handles repetitive tasks and humans manage judgment-heavy decisions. And then there's another role gaining attention across financial institutions: AI translators. Not language translators, business translators. Professionals who understand artificial intelligence well enough to explain it clearly to executives, regulators, and clients. Because most leadership teams don't need to code algorithms. They need to understand what the technology means for their business strategy. And professionals who can bridge that knowledge gap often become extremely valuable inside organizations. Now, here's something encouraging. You do not need to become a machine learning engineer to remain competitive in the AI-driven financial industry. What you need is AI literacy, understanding what the tools can do, understanding their limitations, understanding where human oversight is still necessary, and understanding how AI can enhance business decision-making rather than replace it. Those skills are becoming essential across industries, not just in fintech, but in banking, consulting, insurance, and corporate finance. Because artificial intelligence is not just changing jobs, it's changing the structure of the entire financial economy. Digital payments, automated investment platforms, algorithmic credit scoring, AI-assisted financial planning tools. All of these innovations are reshaping how financial services operate. And whenever industries evolve this quickly, workforce structures evolve with them. That's why the most strategic professionals are asking a different question right now. Instead of asking, will AI take my job? They're asking, where is the new value being created? Where are companies investing in new capabilities? Where are new skill categories emerging? Where are hybrid roles forming between technology and business expertise? Because those signals reveal where future career opportunities are forming. The professionals who pay attention to those signals often reposition themselves before major disruptions hit their roles directly. They learn earlier, they adapt earlier, and they build skills that align with where the industry is going, rather than where it used to be. Now, before we close today's report, I want you to think about something. Imagine that 70% of the routine tasks inside your job were automated tomorrow. Not the entire job, but most of the repetitive tasks. What do you believe your employer would most likely do? Would they retrain you for higher level responsibilities? Would they redesign your role around strategy and oversight? Would they reduce the size of the team? Or would they eliminate the role entirely? Your answer to that question reveals something important about your current career leverage. Drop your answer in the comments. And if this breakdown helped you understand the strategy behind Fintech Layoffs, like the video so other professionals can find it too. Subscribe if you want weekly AI job reports that help you move strategically instead of reacting emotionally. Because in the AI economy, the professionals who understand structural change early always move differently. And movement matters. I'll see you in the next report.